Assalamualaikum warahmatullahi wabarakatuh and salam sejahtera. We meet again in another video. This video is to explain on the debenture, whereby debenture is one of the financial instruments for a company. Okay, first we go to the definition of debenture. So it defined as a security document whereby this security document is classified as non-current liability because it contains an obligation to repay in the future. When the company issue the debenture, usually the company need to have a collateral, either fixed or float charge, whereby the fixed charge we use normally non-current asset, whereby we should not use the non-current asset that are on hire purchase agreement. And the float normally we use inventory because the value of inventory will change in the future. The debenture can be issued either at par, whereby we call it as nominal value, and usually we write as issued at 100. Or the debenture can be issued at premium, whereby it is above the nominal value. Normally we written as issued at 120. Or the debenture can be issued at discount, whereby the value will be less than the nominal value. For example, we write as issued at 95. So how the measures of financial liability? The debenture is one of the financial liability, where the FAR160 saying that it can be measured by fair value. Normally, we choose the fair value for security held for trading because the value can be retained in practice, and it is or other financial liability that it is assumed we choose fair value because to reduce any accounting mismatch. That's for accountant to provide the justifications. Most of financial liability use amortized cost as their measurement, whereby when we issue the financial liability, for example the debenture, the value that we take for fair we record is fair value minus any transactions cost. But the year end, since the liability will be increased in due time, so the fair value will be added with the finance cost, whereby we usually use the effective interest rate. And if you have paid any cash regarding the liability, so it will be decreased or deducted from the value of the liability. You might questioning what is an effective interest rate. Well, actually the effective interest rate is a real percentage rate owed or return for investment or debt that by taking account the effects of compounding the rate over time. You might as well open your mathematics book that you learned last semester. Well, the debenture will have an issuance cost. Actually, the equity also has an issuance cost, but purposely, the issuance cost might affect so much on financial liability. So we will discuss the issuance cost in this video. So the issuance cost of financial liability or debenture is also known as a transaction cost. So not the regularly the cost is on registration or other regulatory fees, whereby you need to pay to Bursa Malaysia or Bank Negara Malaysia, or the printing cost, clerical cost, and also stamp duties. Or maybe you need to pay legal fees or consultations on accounting professional fees. Also, you have the marketing and promotional cost on how to issue or promoting the debenture issuance. So all these issuance costs will be treated depends on the measurement chosen. If you choose the fair value, all the transaction costs will be write off in statement of profit or loss, treated as expenses. If you choose amortized cost measurement, so this transaction cost or issuance cost will be deducted from initial recognition value. So the journal entries, when you issue debenture, for example, this is the example of questions that we use. Okay, BD Berhad raises the finance by issuing 20 million of 5% debenture on 1st January 2019. The debenture issued at 90, meaning that it has discount, and it will be redeemed after 5 years at a determined value. So the end value is not determined yet. So the effective rate of interest is at 10%, and the issue costs were 100,000. So from the questions, we can derive the information as the nominal value is 20 million. Issue at 90 means issue at discount, so the initial recognition value is 18 million, because the 20 million multiplied with the 90%, 0.9. So that is the initial recognition value, and we can derive the information. Issue cost 100,000, and the 5%, it says here 5% debenture. So the 5% is actually the interest rate promised to be paid annually to the debenture holder. And the next information is the effective rate of interest is 10%. So this is the information that we gather from the question. So the initial recognition value is actually from the issued value 18 million deduct with the issue cost 100,000. So the initial recognition value that we need to record in our accounts is 17,900,000. So your journal entries would be debit bank account 17,900,000 and credit the 5% debenture account 17,900,000. That is to show that how much the money received from the issuance of the debenture. Next is to show what are the journal entries at the end of the year. So we know that the nominal value is 20 million. The interest rate we should pay to the debenture holder is 5%. Effective rate is 10%, and the opening balance of debenture that we calculate is 17,900,000. So we can display the journal entries that involve the records as follows: opening balance 17,900,000, and the finance charge. Okay, the finance charge is actually to increase the value of the debenture, because the value of debenture calculated over time, so it will increase by the finance charge. and will be deducted with the interest paid, that is 1 million ringgit, and should be the carrying amount 18,690,000. Okay, I'll show you one by one how we get the finance charge. So the finance charge is actually the opening balances multiplied with the effective rate of interest. So we multiply 17,900,000 with 10%. That is the effective rate of interest. And the interest paid is we calculate from the nominal value. Remember, the nominal value is 20 million, and multiply with the interest rate we promised to the debenture holder, that is the 5%. And the carrying amount, that is the value actually we need to record in the 5% debenture account, is 18,690,000, because from 17,900,000, that is the opening balances, must be added with the finance charge, that is 1,790,000, and deduct with the interest paid 1 million. So we'll come up with the that carrying amount of the debenture. So once we have the value or the amount calculated, so the journal entries at the year end will show that the finance cost debited 1,790,000, interest paid is credited 1 million, and the value of 5% of debenture will be increased by crediting it 790,000. So that is the adjustment for calculating or adjusting the carrying amount of the debenture. Confused? I'm sure you got this. Okay, let's say, so what we actually owe to the debenture holders, right? How much is the company owe to the debenture holders? Okay, on the 1st January, remember, time value of money, remember you learn the value of money is changed over time. So 1st January, when we issued, we recognize the value of the debenture is 17,900,000. That is the first calculation. The nominal value multiplied with the discount rate, and then we deduct with the transaction cost. So we have that 17,900,000. So over the year, from 1st January and then until the December 31st of the year, so we actually owed the debenture holders is 19,690,000. That is the amount actually we owe to debenture, because the amount we owed is include the finance charge for the year. That is the initial recognition value multiplied with the effective rate of interest, that is a finance charge, 1,790,000, and this finance charge must be added up with the money we owe to the debenture holders in 1st January. So at the end of the year, the money they actually owed to the debenture holders is 19,690,000. However, in the finance charge is included the interest promised to the debenture holders, whereby we say that it's 5% per annum. We promise to the debenture holders to pay as interest. So if let's say if the interest has been paid to the debenture holders. So now we want to calculate how much the company owed to the debenture holder. Remember, the finance charge is no longer 1,790,000 because we already paid the debenture holders. So the finance charge is actually has been reduced to 790,000. So when we add up the initial recognition value add with the final charges, so actually we only owe 18,690,000 to the debenture holders. So this is the amount that we need to show in our financial statement, in our accounts. So the journal entries at the end of the year, we would recognize the finance cost to be charged in the statement of profit or loss that is against our retained profit. So debit retained profit and credit the finance cost. And the ledger entries should be like this. So the 5.5% debenture accounts, there is a credit of 17,900,000. This is the initial recognition, what we received the money from the issuance of debenture, and the value has been increased by the excess of finance costs, credited now 790,000. So the balances or the value of 5% debenture as at 31st December is 18,990,000. So the bank account, we show that we receive money 17,900,000 and we also paid interest 1 million. Okay, then debenture interest paid, debited 1 million. We paid by using the bank, and we need to transfer the to finance cost because the debenture interest paid is partly of the finance cost of the debenture. So lastly, at finance cost account, we will see that debenture interest paid 1 million is debited and the 5% debenture is 790,000. And we need to transfer, we need to credit the finance cost and then debited the SOPL later. So that is for now the videos for explaining the debenture issuance.